So this is the weekly outlook, weekly review of this week. So I'm gonna give you a tip, quick tip. There is a candle without a wick. Okay, this is the target, second target. This is the first target. Okay. Whatever. When you see this candle like this, we traded to this weekly fair value gap. We closed bullish. Okay, this is a ranging candle. Okay, this is consolidation. Okay, and we have this tiny fair value gap, and we have this wick. Okay, this wick of this bearish candle is smaller than this wick. So whenever a candle closes like this, we use the upper wick. Okay, and vice versa in the lower side, the opposite direction in the bear scenario. So we use this as this wick as the PD array. Okay, so this wick is the PD array, and this is the half of this wick. So you understand? Okay, I'm talking about this black candle. Okay, it's the same in this candle. Okay, close above it, the maximum the candle gonna trade this or this one is this wick. Okay, this is the maximum. It can go lower too. Okay, if we have like another example here, whatever. So we are in the DXY. We move to the daily. This is the last target we are setting in. The candle without wick that I told you about, this in the hourly. Okay, doesn't show here anyway. This is the first target, and this is the nearest target, which is the previous weekly high. Okay, we reached it into Wednesday when the FOMC. Okay, and the FOMC. So we have this Monday, Tuesday. This is ranging. We didn't take the load, and this is the wick. This is the okay. Let's make it clear so you understand. This is the wick. Okay, let's make it in the red. Okay, we traded into Monday, so the maximum we're gonna trade is this half of this wick, and we have this order block here. This is like a rejection block here, so we trade to the rejection. We might see a reversal from here, or we take this low and form reversals. That's why I am marking this low. Okay, let me take a sip of my coffee. That was my first target. This is the second target, third, and the final target. We go to the 4-hour, how I managed my trades. Okay, I didn't trade this. Okay, we have this gap. Okay, we trade to it, close below, then we trade to it, close above, and from here on we trade upward. Anyway, so here you can have a trade in this, because we're gonna like, our bar is gonna be like, okay, this is a rejection candle, this is a big candle gonna form. We rejected from this gap, opening gap, weekly opening gap. So the target is here. That's why I marked this, but we're not going to trade to this. We're gonna have 2 to 3 hour and get out. Anyway, so in the next day I have seen this close above this, which indicates as a market shift, and we have a fair value gap here. Okay, so how I knew we're going to trade to this, like, just let me tell you, look here, I am moving step by step. I'm not setting a target like this high or anyway near here. Okay, I didn't target from this to this. I target from here to here, from here to here, from here to here. These are my targets, by the way. Look, the nearest targets, I always use the nearest target possible. That gives me 3 hour to 2 hour, and leave. I'm not here to predict the future or say the future target is this. Okay, I know it's one, we are going to this way, but I'm not trading like 70% in return in one trade. Okay, this doesn't work at all. Anyway, we dive. I'm just showing you here what's only works. So if you do this, you're gonna be so profitable. I swear to you, you're gonna be so much profitable. So as we see here, we are consolidating. We get out of consolidation with a fair value gap. We have a reaction from this fair value gap. I didn't enter this trade here, okay, in the opposite side in USD, because I don't risk in FOMC and CPI and NFP. I was doing this like when I was unprofitable. So you see this, these are the targets, okay. We are here closing, set this target, close above this, set this target, close above this, set this target, close above this, set this target. The same here, close above this, set this target, close above this, set these targets, okay. Anyway, so we had this big reaction, okay, and we have this inversion fair value gap, and we have this fair value gap. The first one we're going to trade to and have a reaction from. This is the correct fair value gap or inversion fair value gap, or call it whatever you want. I don't know where we're going to reverse. I said the PD raise, the one we have a reaction from. This is the fair value gap we use, okay. That's it. So we're open, trade higher, trade lower, take this low, have a reaction. This candle will be forming a reaction. Here you might take a conservative decision. I was in a trade from this low, okay, which is the high here. You can see the trade I took in my Instagram, and I was setting these targets, okay. So that was my target, this fair value gap, 30 minutes, boom, close above it. Here we might trade the New York session. It's a low probability, not like London, because we had FOMC, we had a big move, so we retraced, small retracement, then boom, we have a big move in London session. So there is no way to trade New York session in high probability. Now we go to the Euro USD. These are period separators in 1 hour time frame. This is the beginning of the week. We have big candle here. We have this fair value gap, trade to it, boom. I was expecting to take this high, okay, and that was the target here that we trade maximum to it. It's the same as the DXY, so I was expecting this to trade from here to there, okay. So this is the trade I took, yeah, this one here. So after closing here, I took a trade to this fair value gap here, okay. I took a trade in a retracement. I didn't want to take a trade here because these lows were so fine. Yeah, these highs were so fine. I said lows, forget me. So I took a trade here, and this is the trade I took. So basically, you know, I know all of this, and yet I took two trades, one risky trade and one clean trade, and I ended with 2% here and 3% here, which is 5% a week, which is more than you make in a month. So we retraced, closed here, London session open, took the high, closed below, trade lower. I was 1000% sure that we are gonna trade below this, okay, and I didn't take TP to this way, okay. I took TP here, so I don't know. This is the TP. So as I said, I don't know what you're doing, okay, but you're doing it so wrong. I know, like from here to here, we have 90% probability we're gonna trade to this PD array, okay, and from here to here, we have 70% probability we're gonna trade to this low today in this session, okay. We have 50% probability we're going to trade to this low in New York session, and we have 30% probability we're going to trade to this low in Friday. You don't know, do you know? You're not the programmer of the financial markets. You didn't create the algorithm, so you don't know what is the neuro target that can give you 2% to 3% return. This one, okay, this low, this low, this low, this fair value gap here, this fair value gap, not this low, not mate, not this low. So if you took a trade in the 15-minute, that would be the trade you took. You'll stop here, and you're gonna have this one, okay. So as soon we opened here, I did that, like this candle didn't exist when I tried this, so I said to here below this target, it's 2%, no, so I'm not gonna use the 30. And from here in the 15 minutes, how much? Like I'll put my stop here. This is 2% now. So I am going to use the 5 minutes, but it's going to be a little bit risky, but we are in a high probability bearish order flow. So the bias is important. So as we see here, these are accumulation. Okay, these are the lows that we're targeting. Not this low because this went aggressively above. These candles was just, it's made like stairs, so it's easy to target. I just trade the easiest trades, okay? And if you can predict the future, that you can take this trade here, which is low probability in return. Maybe you wait for fair value gap. I don't know what model you have, okay, or you trade with. This is acceptable if you wait for a fair value gap, or this rejection candle to close and take a risky entry, which we can sweep it and reverse. And this is a 2% trade. I don't know, mate. I took a trade in the 5 minutes. Okay, I took it in the 5 minutes. So this is the open retracement expansion expansion. This is the high we took. So we took liquidity. What else? We took liquidity above the midnight open. What else are you waiting for? Check the GBP USD. We had SMT, and even if we hadn't SMT, I would still take this trade with closed eyes here and put my stop loss here and target just this, which was 3%. Okay, because below this fair value gap we have a fair value gap in the 5 minutes, which is not a breakaway gap, it is a fair value gap, so we're going to trade to it. And this is the best trade of the week, maybe of the month. Clean, fast. As I always say, do not move your stop loss to break even, because here we had news on EU. We got like, I was here like nearly 2%. So don't panic, we took this low. This is the news. We retraced. This is 15 minutes retracement, okay, to the fair value gap, and this is a trade you can take again here and target 2%. I don't know, you know better than me. So I took a trade here, and this is the easiest 3%. I didn't move my stop loss, okay? I took a trade, I went to bed. That's it. And I took screenshots of the trade here, and I put it on my Instagram with the TP next here. So that's it. So this is the weekly review. I want you to go to the time frames and see how it works, like why I didn't take a trade in Wednesday, why I didn't trade in Monday, why I trade less days than you are, why I take trade less than you take, why I work for maximum 3 hours and you work all the day trading and have negative results. Why is that? I just simply woke up here and I waited for all of this, and here my coffee was ready and I sit in my desk and I saw this, waited for this to trade lower and took a trade here and went to bed. I left my coffee on my desk because I'm going to sleep, okay? I don't care. That was the early morning. So like, I woke up in this candle, I washed my face in this candle, I prepared my coffee. Here my coffee was ready. I sit on my desk, I mark this changing state of delivery, and I see it dropping. Okay, didn't close. Okay, created SMT with GBP/USD. Okay, the next candle closed. Boom, I am in 100%, and I go to bed. This is so simple and easy, so make it simple like this and you're gonna be so profitable. So don't forget to follow for more, and follow me on my Instagram or my Telegram for daily tips. And that's it.